Good morning. Welcome to another Dornbush download.
Number 81, Michael.
81, Dan.
Unbelievable.
I tell you what, it just gets bigger and better, doesn't it? Absolutely. And I guess too, another little milestone here in the office, Dornbush Partners' 12th birthday.
That's incredible, isn't it?
The other day, yeah.
You've been here all that time, Michael, haven't you?
Yeah. Been on board since sort of day one in the DP world. You weren't
That's
long
long
after,
service
of course.
leave. No, you're right. You're on long service leave.
Yeah, I am too. Yeah.
Marvellous.
Might have to look into that. Absolutely. But been an interesting period of time, hasn't it? We've seen the very best of the market, I guess, and we've seen hopefully the very worst of the market as well through the GFC and the like. A few grey hairs extra, a few kilos extra. It's been an interesting
Speak for yourself, Mike.
12 years. Hopefully we got at least another 12 in us. So we'll see how we go.
That'll be retirement for me then. I'm not going to be like Gouldson.
Yes, hang around. Become part of the furniture after a while. Absolutely.
Now, I was away yesterday. I'm waving my son off to work in Dubai for 12 months. So hello, Ben, if you're watching. So it's all yours, Michael. I'm just going to stand here and do that parliamentarian thing, not in the background.
Yes, well, another interesting week. I mean, probably, Dan, one thing to touch on, not really market focused at this stage, but politically a lot happening.
There is.
Malcolm Turnbull looking at calling back both the houses to try and get that ABCC bill through the Senate.
Yep.
I think from memory there's 8 crossbenchers, of which only one has put their hand up in agreement, Nick Xenophon.
Bob Day might be the man.
Oh, it could be, yeah. And if that doesn't go through, looking very likely that there'll be a double dissolution, so they'll dissolve both houses. I guess thrown into the mix as well, we've got the budget coming up, and there's been talk too that the budget might sort of come out that week earlier as well. So.
That's going to be really interesting from a financial point of view, Michael, isn't it, the budget? A lot of talk about changing the tax rates on superannuation. Hopefully not, but...
Yeah, the usual suspects have got the big targets on the back again, haven't they? Super...
three areas, gearing. Isn't there? Super, GST and personal tax. So super's it's got its head on the block, I think, at the moment. Yeah, it has, and with $2 trillion odd in super these days, you'd have to think most treasurers would be licking their lips to try and get a bit extra out of that pool of money. So, negative gearing, of course, in the pipeline. But I guess we'll wait and see what comes out in the budget. It could be a week earlier this year if they do go to a double dissolution. They want to give basically Bill Shorten that extra week to retort to the budget. From a market point of view, Michael, that'll be pretty interesting too, won't it? Because we generally have that run up into May, don't we? With when the other 3 big banks, plus a couple of fringe dwellers report. If the budget's a bit of a big stick type budget, what's that going to do for the share market? Maybe that sell in May and go away might come in a bit earlier this year.
Exactly right, Dan. I mean, the last couple of budgets have been pretty light on, really, haven't they? There was a big swing when Abbott came in to try and get some hard sort of reforms through, but it basically all got nailed in the Senate. Yep. So we haven't really seen a hardcore budget sort of come through for a little while now. But you're exactly right. We certainly. We could see a little bit of blood in the streets, dare I say it, if there's some tough decisions that are sort of put to us. So,
and I think that just really comes back to people in their portfolios and looking at those shares that perhaps they don't really want in their portfolios, and they're the opportunities perhaps to move away from those companies, put it back into cash and see what happens. So just to be a bit more proactive. Yeah,
absolutely right. Yeah, and we've seen how tough it can get from a shareholder perspective when the market gets cranky. It deteriorates very quickly. Yep. So, putting some of that money back into cash just to let the waves crash over for a bit, certainly not a bad idea. Yep. But you also bring up a good point too, Dan, a good segue, if you will. Banks and that reporting season. We mentioned it a little bit about a week or a couple of weeks ago about dividend stripping.
Yes.
So certainly a strategy I know that you're always pretty keen to sort of follow up on.
Yeah. Yeah, it's a good strategy, Michael, isn't it? I think the big thing with dividend stripping is you've got to bite the bullet and get out of the warrant, don't you, if you're going to go that way. And that's something to really give us a ring and have a chat about, so we can do some sums for you and show you exactly how it works. But this is the time to think about it, isn't it? Leading up to the three banks, you've got three companies, good companies that should, if CBA's led the way, should increase their profits. At worst, keep their dividends the same. Hopefully, historical low, bad and doubtful debts like the Commonwealth Bank has. So, it should be a good time for it.
Yeah, absolutely, and that's it. And it's always good to crunch some numbers. Still some very good yields on banks at the moment, assuming that the dividends stay constant at least, which we're pretty confident they will. There's the 45-day rule thrown in there as well. So the timing of it all becomes imperative. But,
from those yields, Michael, too, those exchange-traded funds are looking pretty attractive now, aren't they? Those ones that, like that yield maximiser or YMAX that invests in the ASX 20, the value of that's pretty low, and it's paying, a 9.8% dividend per annum paid quarterly. So it's, it's a pretty good yield if that's what you're chasing in a good solid mix of companies.
Yeah, absolutely. No, we've seen a lot more interest in those exchange-traded funds, haven't we? Particularly in the last 6, even probably 12 months or so, with people that are less inclined to sort of ride the wave of the volatility of specific companies. Pooling their investments through one of these ETFs.
Or the listed investment companies, and we're starting to see a few of those come to the market too now. So I dare say we'll be talking about that over the coming weeks as well.
Yeah, absolutely. Yeah, I think we've even got a couple of IPOs in that listed investment company space. So, so if you've got a bit of an inkling for that sort of thing, give us a call and we're more than happy to give you a bit more info. But other than that, mate, I think we're pretty much done for the...
We've got Easter. We might as well go home now.
We should. We probably deserve it, I'd reckon.
I reckon. Leave Andrew and Brendan and we'll go.
Yeah, but no, market has a couple of days off, so Tuesday next week it fires up again. So I hope everyone has a good and safe Easter.